All right, so good morning. I'm going to go over some Fibonacci's real quick and why and how they are important and how relevant they are. Here we have the SPY on a 4-hour chart. Obviously, we've been going in a trend for a long time. Once we broke this trend, it's been downhill ever since. So if you don't know about Fibonacci, Fibonacci is a tool, a retracement tool that shows that after a swing high to a swing low or a swing low to a swing high, what kind of retracement we'll be looking at before it continues to go down or if there's going to be a reversal. So here we got the swing high right here. We have a swing low right here. And this 0.50 to 0.618 area is what they call the golden pocket, and where most likely price action will go back to before continuing to go down. Now, as you can see, right from 479.89, 480, we went right down. So had you drawn a Fibonacci after this swing high to swing low, we went right back to the 0.618, went down a little bit, tried to go back above the 0.618 and clearly failed. So a lot of people who use this tool to trade are making good amount of profits, because right here it's just showing 0.618 rejection and downside. So this right here is an area where people are looking to either look to go long, which is a lower probability, or most likely look to go short right here. And had you gone short here and got out at this break, and had you gone short here and got out at this break, you would have made really good money. And back to just even the channels, like once this channel breaks right here, becomes a new channel. So when you're combining Fibonacci and indicators with channels and oversold, overbought, I mean, if you look right here, this channel breaks right when the MACD is starting to cross, stochastic starts to cross on the daily, and we get a breakout of this channel. And as soon as this upside ends is exactly when this trend breaks. So here we are. We get a drop from here to here, goes right back to the 0.618, breaks trend line, overbought, we get a nice pullback. Once this breaks, we get a little bit of a sideways consolidation. Once this breaks right here, we get a little bit of a sideways consolidation, and then it breaks out. Tests the 0.618 again, fails, breaks out of this box, tests the 0.618 again. Obviously, if you had your Fibonacci up, you would have known that we failed to break out above here. It tried to fake out a little bit, failed, and then another leg down. So, it's very relevant and very important that you guys use these retracement tools. And one of the most important reasons why is because it's a Fibonacci algo trading tool, and all these moves, even though you have retail buying and selling, is all algo related, is all institutional hedge funds that have $1 million software companies that are moving the markets like this. There's no coincidence that we break channel right here, go to the 0.618, fake out, go back to the 0.618 and drop again. It's all algo moves. And I'll just take this one away right here, and I'll show you further down the line how it just continues to keep playing out here. So after this move from here to here, right, we got a swing high to a swing low. Guess what level you think this is? It's the 0.618. I mean, it's almost like if you just stop paying attention to the news and what people are telling you, and the world is going to end and yada yada, and you stick to the charts will never lie to you. The news is developed and designed to get everybody to go long, go short when they shouldn't be. And that's how these hedge funds are making money. If you want to beat the system and you want to get around everything, you need to be focusing on channels, Fibonacci's, supply and demand, obviously, but supply and demand is a kind of a gray area where, obviously when stuff comes back to supply or demand, it'll either move up or down, but If you really want to be, focusing on entries, which is the most important part, you really want to be playing these channel breaks and playing these fibs, because this will tell you a lot more than just simple supply and demand. So here we go. Swing high to a swing low. We draw a Fibonacci, and boom, it goes right back to the 0.618. Same example as last time. It went here, failed, tried again, failed. So here we go. We come down, we come up here, we fail 0.618, we come back down, we come back up, we fake out above the 0.618, and it's all downhill from there. I mean, you just can't make this stuff up. And then here you go. I'll just give another example. So now we got a swing low right here to a swing high. And what do we know about after a swing low to a swing high? That is most likely going to head back to 0.618 before either a retracement to keep going up or a fail. So clearly, as soon as this channel broke right here, that's it. It was all downhill. As soon as this broke, downhill. Overbought, overbought. Look at these indicators. I know a lot of people like to talk about, oh, indicators are just so laggy and they're trash and yada yada. Well, it's no coincidence that at every channel break, you got overbought and you got overbought here. And there's no coincidence that at this channel break, you have oversold and oversold here. So if you're not combining factors when you're trading and using confluence to really make your, determining factor of whether you're going to put a trade on or not, you're not going to be successful at this. Anybody can get lucky once or twice, but it's all about being consistent. At every one of these channel breaks, real quick, delete that. At every single one of these major channel breaks, there's always a determining factor, and the determining factor is when trend changes that you have overbought and oversold. This is the 4-hour time frame. If you have overbought right here, and this has been overbought, this is a little bit more delayed, but this is a lot more, telling you what's kind of happening in between this large movement. So here you go. You got oversold on the 4-hour. Anything oversold on the 4-hour has more potential to go up kind of than it has to go down. Clearly it can keep going down, but you have oversold here, you have oversold here. This vertical line literally lines up telling you that the momentum to the downside has basically been running out, and we should see some spring to the upside. So as soon as this right here, as soon as this breaks, the theory is to go long. Well, the theory played out. I mean, it's a no-brainer. Channel breaks, we break out. Oversold on the higher time frame, breakout. Overbought right here, been overbought. This is coming down. It's the coolest thing about stochastic, honestly, is every time it goes to the top of the chart, it will go back down to the bottom. And when it goes back to the bottom, it will come back up to the top, and vice versa. So you got to be combining multiple factors when you're taking these trades. I'm just going to draw another Fibonacci example right over here. Here we go. We have this swing low to this swing high. This swing high right here to this swing low. Drag it across. And look where we are. Price action goes right back to the 0.618, tries to hit the next level. Little box is formed. We can't get above the box, so we know if we can't get above the box, once box fails, we go down. So high to low, back to the 0.618 area, stays above a little bit, sideways consolidation, calls above the box, puts below, puts paid out. I'll give another example. Here we are. This swing high to this swing low. I think this one was a 50% retracement, but we'll still put it up. So here we are. This went down here, went right back to the 0.50. The 0.50 to the 0.618 is basically the golden pocket. This is where price action will most likely head to. It's also why it's important that when you're in puts, and you see this channel forming right here, and this channel breaks, you got to get out of your puts for a little while, because what's most likely is going to happen is you're going to get a Fibonacci retracement. You're going to get a pullback. And if you're holding your puts here and you're holding them through this Fibonacci retracement, it did go back down, but then it just reversed, you know? So I really like to just play the channels and get out at the channel break, because there's no telling whether this will be a reversal, you know, a pullback and then go down, or if this will be a pullback and then a nasty rip your face off type of situation. The best way to defend yourself against the markets and to protect your account is really just to get puts here, calls here, puts here, calls here. Trade the channel breaks. If you're trading anything else, you might be winning money, but you're really, really gambling at that point, because, you know, the motto is the trend is your friend, and it's the most underused basic concept in trading. You can't make money in options if you're not riding with the trend. So if you're not getting in at the trend breaks into a new trend, or if you're holding calls while this is going down, you know, hoping for a reversal, that's not how this works. And if you're doing 0-day expiration and you're trading these channel breaks, dude, is nothing but lots of money in here. I'll give another example right now. So we got this move from down here to up here. And look where we are. From down here to up here, we went right almost to the 0.618 level. We just wicked it. And the fact that we didn't keep going down means that this can keep going up. It's kind of holding these levels right here. So I wouldn't be looking for shorts until this right here breaks. When this breaks, you can maybe think about going short, but as of right now, these levels are holding. This is looking like this could break out on SPY. Obviously, anything can happen, but, you know, from here to here, this has been the trend line, and we are basically, you know, at that level, which we all know, of course. So we had a swing high to swing low. We retraced, we kind of came back a little bit, and we're still holding support here. So this very well can be a reversal. One thing, though, is that, you know, we're getting towards overbought. We're getting towards overbought. So, you know, this is definitely a make or break situation. I will definitely not be going short until this trend line breaks. When this trend line breaks, I'm going short. And that's it. There's just no way around it. You know. We got this happening right here. Got this happening right here. We got this happening right here. So we got a channel forming right now, a buying channel, and until this breaks, it's going to go up. This is the best area for puts, is at the break. You know, breaks here, puts. Sideways consolidation. These are the only channels you're ever going to get. You're going to get a buying channel, either a sideways consolidation, or you'll get a selling channel, like such is. So really what you want to be focusing on is combining, you know, all these things together, and this is how you become profitable. Any questions, comments, leave below.